Commonwealth Bank, ANZ, Westpac, NAB. I mean, you see them on practically every street corner. They are the absolute giants of Australian finance. But how well do you really know them? In this explainer, we're going to go beyond the logos to see what truly sets these titans apart.
To really get your head around their scale, you only need one number, $2.43 trillion. That's the size of the mortgage market these four banks manage. It is a mind-bogglingly huge figure that basically anchors our entire economy.
With that kind of dominance, it's super easy to just lump them together as the Big Four. But here's the thing. Underneath the surface, they have very different game plans, different strengths, and different weaknesses. And that's really the big question we're digging into today. Are they actually all the same?
All right, so let's meet the contenders. We're going to break down each bank's personality in the market, taking a look at how financial analysts see them, and what really makes them different in this incredibly competitive space.
First up, the biggest of them all, Commonwealth Bank, or CBA as everyone knows it. It's the market leader, right? It's the one everyone else is constantly measured against. But, as you can imagine, being the biggest comes with its own set of very high expectations. And this quote just nails the CBA story perfectly. Analysts call it a high-quality franchise. That's top-tier praise. But that quality comes at a price. It's the most expensive of the big banks, which means investors are paying a premium for what they see as its safety and strength.
Okay, next in the ring is ANZ. And if CBA is the pricey premium player, well, analysts see ANZ is playing a completely different game.
Now this is where it gets really interesting. You've got the same analysts looking at ANZ as pretty much the polar opposite of CBA, at least from a valuation perspective. They're flagging it as the best value of the four. Why? Well, it's offering an attractive yield and a strong capital position, making it a favorite for investors looking for potential growth.
Our third contender is Westpac. And Westpac's story? It's all about stability and resilience, which is a big deal, especially when the economy feels a bit uncertain.
So the key takeaway here is financial muscle. Wilsons points out Westpac's attractive yield and, this is the big one, the strongest balance sheet of the majors. What that means is it's incredibly well capitalized, which gives it the flexibility to potentially return more of that capital back to shareholders.
And rounding out our big four is NAB, which has long been the powerhouse of business lending. But how's it looking in the current climate?
Well, according to the analysts, the picture for NAB is a bit more cautious. They see an uncompelling risk/reward balance at the moment. In simple terms, they feel its valuation is a bit rich and its trends in costs and capital just aren't looking as strong as its peers. That's leading to a more reserved outlook.
Okay, so we've met the players, we've heard what the experts are saying. Now let's get to the scorecard and see the hard numbers that are actually driving these conclusions.
This table really cuts right to the chase, so let's walk through it. First, check out the cost outlook. ANZ is guiding for lower costs, and Westpac is aiming for flat. That's exactly what investors want to see. CBA and NAB, on the other hand, are expecting costs to grow. Now let's look at capital strength. This CET1 ratio, think of it as the bank's rainy day fund for absorbing unexpected losses. Higher is always better. And you can see Westpac is leading the pack at 12.5%, with ANZ right behind. This strength helps explain why, in that final row, analysts have an overweight or preferred rating on ANZ and Westpac. It all connects.
So that scorecard gives us a great snapshot, but it also highlights a critical battleground, the efficiency gap. What this slide shows is the cost-to-income ratio. Basically, it shows how many cents a bank spends just to make a single dollar of income. Obviously, lower is way better. And you can see CBA is the clear leader here, spending just under 45 cents. Westpac, on the other hand, at over 54 cents, has a lot more ground to make up. Let me tell you, closing this gap is the name of the game for boosting returns to shareholders. It's a massive focus.
Now, if we zoom out for a second, the whole banking sector is actually doing pretty well. Credit growth is strong, home loans and business lending are up, and bad debts are surprisingly low. But there's always a but, right? Intense competition is squeezing profit margins for everyone, and that's going to be a major headwind for earnings down the road.
So, we've looked at each bank, we've looked at the sector. What does this all mean? What are the big ideas you should really take away from all this? Well, we've boiled it down to three crucial points.
First, that efficiency gap we just talked about, it's not just a number on a spreadsheet. It's a core driver of value. Second, in a world of changing interest rates, having huge amounts of low-cost customer deposits, what analysts call sticky deposits, is like having a giant defensive moat around your castle. It's cheap, stable funding. And third, looking ahead, technology is absolutely everything.
The banks that nail their AI integration and digital platforms are going to be the winners of tomorrow. Full stop. And that brings us to our final section, the road ahead. Because the banking sector is really at a crossroads, trying to navigate brand new technology and fiercer competition than ever before.
Okay, before we wrap up, a quick but very important reminder. This explainer is for your information only. It is absolutely not financial advice. You should always talk to a qualified professional before making any kind of investment decision.
So, we'll end with this final thought. While these banks have dominated Australia for decades, the game is changing faster than ever. The crucial question now isn't just about who's biggest or strongest today. It's about which of these giants is truly built to thrive in the digital-first, AI-driven future of finance.